on November 12th in Bombay. We had 65 authors from around the world to start a dialogue about India's development and what it will take to get it to reach its potential. Very wide-ranging CEOs from India and around the world. We have Mr. Kumar Mangalam Birla, Mukesh Ambani, Anand Mahindra, Sunil Mittal, the CEO of Google, Bill Gates, and at the event you'll get a chance to hear from Anand Mahindra and Mukesh Ambani and others about what their views are about India and the long-term potential.
McKinsey & Company presents Reimagining India, Unlocking the Potential of Asia's Next Superpower. Supported by Asia Society India Centre in partnership with CNBC TV 18. This November in Mumbai. This is TV 18. And you're watching CNBC TV 18. Grant Thornton, an instinct for growth.
At Grant Thornton's annual Global Partners Conference, we had eminent speakers from 6 different countries come together to discuss unlocking global growth opportunities given the current economic environment where even the IMF and the World Bank have revised their growth forecast downwards, indicating that it's going to be a challenging year ahead as far as global growth is concerned. Discussing this and a lot more were our panelists, Stephen M. Chipman, Chief Executive Officer, Grant Thornton US, Stanley Chang, Managing Partner Advisory Services, Grant Thornton China, Scott Barnes, Chief Executive Officer, Grant Thornton UK, Robert Quant, Chief Executive Officer, Grant Thornton Australia, Roy Buddle, Executive Director, Member Firm Development Latin America, and Deepak Nagar, Managing Partner, Grant Thornton South Africa.
It's not just issues with growth, but it's also issues pertaining to uncertainty which are weighing on investor sentiment, not just in India, but pretty much everywhere around the world. Let me start with South Africa and what you're actually seeing there in terms of the kind of growth that you actually anticipate, the government's response to try and continue to sustain that growth, because sustainability of this kind of high growth rate has been the issue as far as most emerging markets are concerned.
It's probably currently at about 2% GDP growth, which is significantly low.
Yeah.
And it's been downgraded quite a few times by the IMF over the last couple of months. And governments tried quite a few different stimulus methods to try and say, how do we ensure that we try and get increased growth into the country? But it's been fairly difficult because we also have elections next year in the country, and you've got governments in almost a stalemate at the moment. So
there's a lot of similarities between what's happening in South Africa and what's happening in India. You've got elections around the corner, we've got elections around the corner.
Absolutely.
Your currency has seen a significant depreciation,
Absolutely.
We've seen a significant depreciation, your growth rates have come off, ours have come off, and the challenges are also pretty similar: infrastructure, governance, so on and so forth.
Correct. And from a currency perspective, as much as that has depreciated, I think the bigger signals from a South African perspective is actually looking at inflation and the interest rate.
Yeah.
Because I think if one looks at the populace in general, that affects them more than the exchange rate in itself. Because, if inflation continues to get out of control, then effectively goods become more expensive.
That's another similarity between you and us. Okay, let me talk to you about what's happening in Latin America. Another sort of region where we've actually seen growth coming off significantly, but you've got a triple P thesis there, and you're going to be betting on the triple P. So explain that to our audience here.
The 3 Ps, and specifically referring to, the 3 stars this year, for country-wise are Paraguay, Panama, and Peru. Not the biggest economies, and we all know who they are. I mean, the biggest economies are Brazil and Mexico, clearly, with Argentina third. But Paraguay is one of those emerging economies I think would be a very interesting market for our business leaders, again, here this afternoon, to keep a very close and watchful eye on. It's going to grow around 10% on GDP terms, macro terms. Panama will grow 8% as well because of the canal expansion that's going on. And Peru is become a very consistent player with around 6% growth as well this year. So I think between those three, those are 3 of the stars. But backing that up, you've got a recurring steady growth in Brazil. They're going to do around 2.6% this year. Mexico is doing very well. Chile is always in there as well, a very consistent high performer.
Let me talk about possible headwinds and challenges. As far as India is concerned, the uncertainty on the tax front has been a key cause of concern. We've seen the retrospective tax amendment come into play, but it's not just an India problem at this point in time. It may be a more acute problem in India today, but it is something that governments around the world are grappling with. Let me get your thoughts really as far as tax and tax-related issues, and how much of a challenge is that going to be over the next couple of years. Let me start with you.
Yes, tax reform has been a major topic of discussion in the United States, and I've had the opportunity myself to be on Capitol Hill representing Grant Thornton, talking to representatives on both sides of the aisle, and actually this is a topic which there's broad agreement that the US tax code needs to be reformed. It's too complex and it's not competitive. We have the highest corporate tax rates now in the US within the OECD. That's the good news. The bad news, of course, is that no one can agree on how to do it, and how to do it in a way that's revenue neutral. So I think it's unlikely, especially in the current environment, that you're going to see tax reform in the United States in the next year. Mm-hmm. But I think within a medium-term time frame, you are going to see fairly major tax reform in the United States, but possibly not until the next administration.
China?
I think there have been many changes that are being implemented in China right now. I think the most important one is changing from the traditional business tax to more value-adding tax basis. The government has started in 10 cities and I think even more jurisdiction now to try to convert the old antiquated business tax system and then actually try to promote more on value-adding aspect of the business. I think that will be a very good news for all the investors coming to China. And also another great move they're doing right now is trying to smooth out the differences between central government enacting the tax and then local jurisdictions enforcing the rules. And this has been on the major agenda of all the party leaderships, and I think they are making some good changes. Of course, it's a little bit too early to tell, but I think these are all good things to come. So actually, in that regard, I'm quite happy with what's going on.
What about the UK? Much publicized, much talked about, going after Starbucks, lifting the corporate veil, so on and so forth. What can we expect?
I just think the politicians have got themselves in such a mess with tax. It really is a mess in my view, because on the one hand you've got politicians saying we want to have a very attractive tax regime so we'll get people to invest and get people to grow their business and so on and so forth. And then on the other hand, you've got sort of headlines about not just Starbucks, but a whole bunch of companies who are using quite legitimate tax planning policy to within the existing guidelines. It's become very political. I think it's forgetting what's going on in the economy. It's become a political spat in my view. I was watching a TV program only a couple of weeks ago where there was it's probably more than a few weeks ago, but there was a G7 meeting, and George Osborne was saying, we've got an agreement now to clamp down on tax avoidance amongst the G7, and then 2 minutes later, the same news program, he said we're giving a tax break to some company to come and make a film in the UK, and I thought, if that's not hypocritical, I don't know, I don't know what is.
I think in Australia, I think we're in a good place where tax is going. It's just we won't see it for the next term of government. This incoming government recognises we need lower corporate taxes, we need fewer taxes. It's already committed to getting rid of some of the taxes which have really prohibited inbound investment. The challenge, which is why it won't happen, I believe, in the first term, is we do have to broaden the tax base. There's just not enough transactions being taxed, and the GST, or goods and services tax, is where that opportunity can come in terms of collecting there. I believe that will happen in the next term of the government, but I do believe it will happen.
I do think there's an underlying issue on this tax topic that transcends globally, and it's transparency. I think in a world where there's increasing transparency because of our communication tools and because of access to information, there's going to be a growing demand for societies around the world to understand more about the taxes organizations pay and how they pay them. That won't stop governments from competing on their tax regimes, but it is going to put more and more pressure on organizations to be transparent. So what we're starting to see in boardrooms is a recognition that organizations need to reflect on their reputational risk associated with the transparency and likely future transparency of their tax arrangements. And that's both corporate and individual.
Grant Thornton, an instinct for growth.
I love cars and I test them to the very limit and sometimes beyond.
I have your weekly dose of news, analysis and exclusive happenings in the automotive sector.
I've tested every motorcycle launched in India for the past 13 years. I help you make the right buying decision.
I am Overdrive.
I am Overdrive.
I am Overdrive.
Overdrive at these times.
Overdrive brought to you by Binani Cement and Sarah.
IIFL presents CNBC TV 18.